See, I told you market will fall. Well, this is a line that you're going to hear today from almost every channel, every Telegram group, every WhatsApp forward. Quite honestly, no one knew, and no one could have known. And I'm going to say this again: no one, including me, knew with certainty that Nifty would break 24,100 today. But here's what I will tell you: there were signals, not guarantees, signals. And today I want to show you exactly what those signals look like so that next time the market is about to do something like this, you are not the last person to know. Usually, every time when the market falls, there are two type of people that would appear post the market. Type one who would just go and claim and say that I told you so. They predicted, they knew, and they are geniuses. There are type two who know no one could have known this thing coming. They are in complete shock. The truth is always somewhere in the middle, and that middle is where the OI data lives. Here's exactly what happened today. Nifty was locked inside a range of 24,100 to 24,200, a 100-point move range on the expiry day. And we discussed this yesterday. What does a 100-point in a range expiry mean? It means that a market is compressed, coiled, and a coiled spring market doesn't stay compressed forever. The question was never if it would move. The question was which direction, and that is something no indicator on the earth could tell you with the 100% certainty. But here is what our data was showing, and that is the part that I want you to pay close attention to. If you go into the PCR, now PCR, if you remember, I had built volume PCR over here. The idea was to build is to show you the intraday activity that are happening during the day. So if you are index traders who especially are trading expiry and or even other journal day, I want you to pay close attention to this particular PCR. This PCR, what you see in the orange color, is typically your standard PCR that just divides your total OI of put and call. But what we have added is the volume PCR. Now, volume PCR is something that works very aggressively in intraday. What it typically means is the total put volume and the total call volume that are traded intraday. So when you see that volume PCR is rising and there's a standard PCR falling, and they kind of a cross somewhere in between, this is a point that I can say with the most certainty, not a surety, that there is something that texture of the market is changing. Which means if the market had kind of a built a support or resistance, and when these lines cross over, there is some composition change happening at the bigger level, and that you should pay attention to. Now, this is not something that you're going to, get it from just watching, once. You have to keep an eye on this every day. But this PCR tells you a lot, especially when the, range is very, very narrow. Okay, so when you see this narrow, typical coiled ranges on the expiry day, so I would humbly request you to come and spend some time on this PCR, watch it how it is progresses. Now, if it would have been reverse, that PCR start rising and the wall PCR start crashing. So that is when you see the upside market would start firing up. Okay, so this is a kind of a hint that you can use in the intraday, especially on the expiry day, to understand whether you are kind of in a trap or not. Okay, now this is kind of a alert, not a sell signal or something. When the put writers are stepping back, and this is where the crossover happens, that the put writers are trying to step back, and the level without defense on the expiry day becomes a magnet, but in a wrong direction. So this is exactly what happened. 24,100 didn't hold because the people who were supposed to defend it, the put writers, started pulling back, and this is where the crossover happened. Now we will see eventually what. See, you can see this happen around 12. So now you can go back in your charts, whichever you follow it, and see what your charts were indicating around 12. Because if you mix both, you will see the both coming up in some single directional way to confirm that there's a texture of the market that is changing. So now what you would do with this? You should ideally now stop looking for anyone who will come and tell you that they called the crash. Because that person might either be lucky or is trying to lie to you to sell you something. Instead, you should start watching the signals, as I just right now explained, that tells you with conviction that something is shifting. The put writing is fading, OI gaps are increasing, call writers are trying to add at a lower levels, which you can even see on your front screen. Whenever you are in the screen, you will always see that call writers will start writing the lower level calls. Whenever the market starts to react erratically, you come and watch these two particular sections. It will give you the kind of a hint for you to know whether to take a decision of holding your longs if you are long, or the short vice versa. Watch this very carefully. Okay, so this is typically a market psychology, not the prediction. These things happen typically on the expiry day, are kind of an adjustment, and also most of the time when this happens during the expiry, it kinds of a change the overall texture of the market as well overall. So I have been telling you that 24,100 is somewhere I'm not convinced that we will hold for a longer time. Okay, and this I am showing you on the charts also. We had a channel. We tried to come out of a channel, but the volumes were absolutely bizarre. RSI was not trying to cross 60 or maybe closing above it. So today this happened. Now this is clear indication that we are heading down. Okay, so now what I will watch after the expiry. So this is what I'm going to watch. Nifty has now typically closed below 24,000. Okay, not just 24,100. So now, if there's any kind of a recovery that is going to happen this monthly expiry, I want some more put writing to be seen around 24,000 if market were to recover. But if there's a fresh call writing that I see around 23,800, which means that right now we are looking into the expiry which is going to be lower. Okay, so instead, what we will do tomorrow when market opens, we will go and keep our option jungle screen open and keep on watching any call writing and put writing in the Nifty happening and how long it sustains. That will then give you the clue about the monthly expiry, which is next Tuesday. Okay, so if this kind of a thinking using a data as an alert and not a crystal ball is something that helps you, subscribe to the channel. I post all these every single day. And if you heard someone saying, I told you so, ask them to show you exactly what they said and before the market opened. The answer will tell you everything. See, they might have randomly said the market will fall, but the kind of the move it happened today is not something that anyone could predict. These things you have to understand during the live market and maybe learn to manage. But if you're not someone who can manage intraday, all these things, then you better stay away from the index, especially on expiry day. That will save you from a lot of headaches. Thank you very much.